Not too long ago, around 7 a.m., my head would be pounding from a 12-hour graveyard shift. I'd be staring at my steering wheel, wondering if I'm going to spin out off the road just from pure exhaustion. I was trading my nights, my health, and my sanity for a steady paycheck. Fast forward to today, I'm self-employed, I own my time, and my bills are fully covered. But if you open my investment account right now, it looks like an absolute crime scene. On paper, my portfolio is bleeding out to the tune of negative $85,900. The index fund purists in my comments are throwing a party right now, screaming that I ruined my life. Today I'm going to open up the books to show you the ugly, messy truth of how a portfolio can be down 85 grand on paper while the cash it prints keeps my family fed and my lights on. Let's look at the raw numbers. No filters, no hiding the red. If we look at my all investment account dashboard right here, you can see the brutal reality. Unrealized returns are down negative $85,912.32. If you look closer at a single position like TSLY inside my TFSA, it gets even worse. I hold 510 shares with an average purchase price of $72.16 USD. The current value, just $14,105. That single position is down $22,734, and that's a 61% loss of capital. But let's look at it from a different angle. Look at the dividends earned section. NVDY has paid me $40,246 in pure cash. TSLY has dragged in another $38,441. When you add all of the cash distributions up, my total return is actually positive $26,215 Canadian. My capital base is shrinking, but the cash engine is firing on all cylinders. Now the critics look at $85,000 drop and they call it a failure. They don't understand the difference between paper value and real cash flow. Volatile covered call ETFs like TSLY are not long-term investments where you buy, hold, and pray for capital appreciation. They're loud, aggressive, fuel-burning portable generators. They write options on single stocks to generate immediate cash premium. When the stock drops, your principal takes a heavy hit. That's the severe NAV erosion you're seeing right here. And the upside is capped so that generally the price doesn't fully recover even if the underlying stock goes back up. If I depended on selling these shares to retire at 65, I would be completely paid. But I don't care about the hypothetical value of the generator if it's currently pushing electricity into my house to pay my mortgage today. The mistake isn't using the generators. The mistake is assuming you can run your entire house on them forever without building a more permanent infrastructure. The entire reason I use these high-yield portable generators is to give my business, Why Not Tech Services, the runway it needs to scale up safely. Right now, the business still has a monthly operational shortfall of about $1.5K per month. Instead of taking on bad debt or stressing over client volume, my portfolio bridges that gap. But the business is where the permanent growth happens. My day-to-day mission out here is protecting senior citizens from the absolute scum running tech and financial scams. I'm expanding our reach by putting everything I know into our Gold Plus security suite. It's comprehensive protection, built to keep seniors safe on the internet without fear. I'm using Dividend cash to secure my family's baseline needs, so that I can focus entirely on scaling my business revenue without working out of desperation. Our ultimate target is clear: $3,500 a month in stable, permanent power grid income. To get there, every single dollar that my portable YieldMax generators spin off is being redirected into building real high-leverage power lines. We're aggressively buying chunks of HHIS, which has already paid us $7,077.96 Canadian over its lifetime. The near-term milestone is getting HHIS to print a reliable $1,000 every single month. That fund uses moderate leverage and broad diversification. It won't melt away like the single stock funds. The portfolio looks ugly to an outsider, but the plan is working perfectly. But let's hear it in the comments. Are you team capital gains or are you team real world cash flow? Drop your current monthly dividend income below, even if it's just $5. And subscribe to watch the whole messy journey. I'll catch you in the next one.